Bob Iger will step down as CEO of Disney, but effective immediately. Investors have reason to be surprised. Iger had recently signed an extension to his contract. Now, he will remain as executive chairman through next year. And the former head of Disney Parks, Bob Chapek, will take the CEO job. Julia Boorstin will be speaking with Bob Iger and Bob Chapek in a few minutes live right here on Fast Money. Gina, I'll come to you. You live in the shadow of the house. You live in L.A., I think right near Disney, or at least near the executive offices of this company. What's your take on this move? It came out of nowhere.
I think it came out of nowhere, and I think a lot of people, obviously, in the stock is reflecting that. If you look at sort of what Disney has so many great chips on the table. Obviously, coronavirus is hitting them really hard, particularly in their parks. They've got Shanghai and Hong Kong both shut down right at they were just about to revive Mulan, which would have been an enormous. They're having to push that back. So they're sort of getting hit right and left. So it's interesting that Iger steps down right now at this moment. Now, handing this off to the head of parks makes the sense. Parks have really driven revenue, and they've also shown that they are completely inelastic in terms of demand. They keep raising the price and they can't get the numbers down. People still continue to come and pay, and that's huge as well.
Well, the fear is they're going to get fewer international visitors.
Absolutely.
But they may make that up with more domestic visitors who are now deciding maybe not to go somewhere to Mexico or to Hawaii. We're going to stay home. We're going to drive to Disney.
Yes, absolutely.
You think that plays out? Is that a scenario?
Well, I mean, I think that Disney still suffers. Disney is probably one of the best places to go catch the flu, for example, just because there's so many children. But Disney also has other huge forms of revenue. Disney Plus is on fire, right? If you look at the numbers, that's basically saying, hey, we're here, we're real, and our content packs a punch, and people want our content.
Yeah, I'm not looking to go to Disney on the best of days, respectfully, unless, again, I can get on Mr. Toad's Wild Ride, which is, again, my favorite, followed by the Hall of Presidents. Outstanding. Throw in a Country Bear Jamboree, that's your day. With that said, you got to try to figure out where to buy it. And if you go back and look, last April, we exploded off of the 120 level, which had been resistance for a long time. That's where I think you re-own the stock, and where I think right now probably $4 or $5 away.
But the things that we're talking about as far as the coronavirus and Disney, and to not try to be insensitive to what's going on, those to me are things I'm fine with on Disney. Those to me are something where even on a disruption, even on revenues for the next 2 quarters, that's something that they won't get back. But it's the core of those 4 essentially parts of the Disney stool that are holding up. That includes studios, it includes consumer products. It does include the broadcast, and it certainly includes the other parts of the Disney Plus story. So to me, the Bob Iger news is critical right now. This was the man who certainly had driven a lot of value, certainly was part of the reason why the multiple at Disney far exceeded that. And yes, this business model, but the rest of the media sector has not even been close here. So that's this is a critical dynamic here, even though Disney Studio in the last 12 months has arguably never had a 12-month period, and I bet we had said that multiple times over the last couple of years. We see what they're doing in streaming. We see their ability to actually use all parts of their flywheel to support their consumer products and everything.
And it's a great part. In the movies, I think they had $7 billion movies last year with their Marvel franchise, but the reality is this. You could sign up all the Disney Plus customers you want at $5.99 a month. That would take years to replicate the margins of a family of 4 or 5 going to Disneyland, where the tickets are what, $150? You're going to spend $200
for 2 or 3 quarters, though. I mean,
but in the way that they reorganize these businesses, they're thinking about these brands and they're streamlining them a bit. And and obviously the new CEO comes from the old Parks division. I'll just say this, this guy's going to be reporting to Bob Iger for the next 18 months or so. So I think that Bob Iger is still the CEO for all intents and purposes. But I think it's really important to remember, Iger's been there for 15 years. What did Iger do? He bought Pixar. He bought Lucas. He bought Marvel. This is the path forward now. Obviously, they bought Fox. They executed on the Disney Plus. Let's see what some new blood can do. And I think Guy's right. I mean, you get this thing back down 20%. That would be peak to trough down to that 120 level. And all of a sudden, you have a thing trading at a market multiple below 20 times or so. And then you say to yourself, let's see what the next decade looks like.
And I'm going to go back to the point that I made earlier, which is that even in the global pandemic scenario, this only lasts 1 to 2 quarters at most. This pain definitely is recouped. So a good value stock like Disney could actually represent incredible value.
Well, I'm looking at a chart here with a 50 and 200-day, Dan, very quickly. I mean, it just busted through the 50-day moving average. It tried to hold for about a cup of coffee and dropped through. There's nothing.
But just real quickly, Sully, I could tell. I could show you everything is broken the uptrend. I mean, we literally had a 45-degree angle. In the best names out there, they've all broken below them. So that is the first level that's been breached. And now you got to start thinking about other levels of support. That 120 should should be fundamental support for this stock. I can't tell you what's going to happen in a big market downdraft, but that should be a fundamental level.
And just to be clear on the impact of parks, and I'm looking at a Deutsche Bank report. This is their research. That says this is essentially an 8% hit to EPS if you base it upon what they've done in terms of closing these parks and the impact in the here and now, at least that we're measuring right now. This should not be changing your view on Disney. Think about where we all were, and I still remain there. And I think a lot of people were with Disney just 2 months ago, especially after we'd now had 2 quarters to report Disney Plus, and we got to see what the studio was doing. We got to see what CPG and direct to consumer. Anyway, I think you have to take a deep breath on this. And I think this is one of those stocks where you take a moment like this, and you don't have to buy it tomorrow because there's a lot of stuff we still need to learn about a management change. But this is one of the great companies, and this is a valuation.
And by the way, 8% hit to EPS. The market may be rational. As of right now, the stock is down 7.5% this month. So we'll see if it holds. The market says we're going to take it down 8%, and that's where we're going to hold.